So crypto has been crashing. Everyone wants to know what is happening. Well, there's tons of reasons that people are saying the market's going down. One of which being for the first time ever, MicroStrategy has gone below 1 NAV, meaning that Sailor's Bitcoin holdings are worth less than their total debt. And traders are front running the death spiral of MicroStrategy and its an eventual Bitcoin forced selling. Now, there's tons of other reasons people are saying too. For example, hotter than expected U.S. inflation data. Fed rate cuts odds are crashing for December to where it's now virtually 50-50 on whether the Fed's going to cut rates or not. People are speculating about an AI bubble burst. There's massive leverage liquidations. SoftBank is selling its entire NVIDIA position. And 2 subprime hedge funds just blew up like in 2007. So we're seeing peak fear, peak manipulation. Now you can sit there and believe whatever you want to believe for why this crash is taking place. But we talked about this 19 hours ago, and this is what I said.
The selling is not yet done for Bitcoin, and we're more than likely going to break to the downside as a higher probability. Now, that's not a guarantee, obviously, and I know that triggers a lot of people to leave comments like this saying it could go up or it could go down. Really great insight. But when I see stuff like this, it tells me that there's a higher likelihood of the price breaking down. So if it breaks to the upside, then before you enter into any trade, you need confirmation on price action. And what that would be a break of resistance and holding it as support to show that this downtrend is done and we are going to go into an uptrend. So we're still in a downtrend right now, series of lower highs and lower lows. The main resistance to watch is right here at roughly $106,000 because as you can see, it's acted as support since the 17th of October until we broke below it right here on the 4th of November, multiple points of contact, and then it rallied back up into it as resistance. So unless price breaks this, then the selling pressure is just going to be strong to the downside. Even if we rally up a little bit further in the short term, the likelihood that we continue down for Bitcoin is higher than continuing up.
And it's funny because I continue to get comments like this from people like Steve here saying, why do you bother with your silly little charts? None of you have correctly predicted anything ever. So I think it's important to have accountability here because I do make a lot of predictions about the market. I'm going to make even more in this video. And I'll admit, I'm not right 100% of the time. If I was, then I'd have over $1 billion right now. So if you find someone that's right 100% of the time, well then message me on Instagram or send us an email letting me know who they are. I love to learn from them because I haven't met a single person out there that's right 100% of the time. Now, there's a lot of conflicting advice out there as well. For example, this one from Cody saying, everyone just buy and stop watching videos and looking at the price. Leave it in a wallet and forget it. Simple. Now, that is one strategy if you're a long-term holder, but a lot of people will come to this channel wanting to learn how to swing trade or how to day trade. For example, this position right here in XRP that's live is a short position, and it's up about $37,000 in profit. And the entry price was $2.48, and right now, XRP is at $2.31, and this was easy to predict because of what I'm going to show you in this video because of these silly little charts here. Because there's a lot of fundamental reasons for why the market's crashing, but you never know when they're going to hit and affect the price action on the chart. But if you know exactly what to look for, then it's going to feel like you're living in a simulation because then the charts start to line up with the fundamentals. So it's really the chicken or the egg, but yet learning how to do technical analysis and looking at the charts is going to give you your best chance of success in the crypto market, even with the mass manipulation out there. And I'll prove it to you in a little bit. So comment 777 if you're feeling blessed, if you're feeling bullish, and if you're going to become the first millionaire in your family tree, you know what to do. Confirm it by tapping the subscribe button. Let's run it. What if you could trade with $100,000 without ever risking any of your own capital? Well, I'm doing it right now, trading a 100K funded account with zero of my own money on the line. I just paid a one-time evaluation fee to take a trading test, and that's it. And we've been getting flooded with messages of people asking us, how do I get crypto loans? How do I leverage trade without risking my own capital? And that's exactly why we partnered with Breakout, the sponsor of today's video, a crypto prop trading firm recently acquired by cryptocurrency exchange Kraken with over 10 million clients in 190 countries processing billions of dollars in trading volume and over 1.5 billion in 2024 and over 15 billion in 2025 in revenue. They'll fund you up to $200,000 for passing one simple trading test. And if you pass the test, you get to keep up to 90% of the profits on your trading account. And you get to withdraw your profits anytime after you pass the test. Now, here's the problem that I see most people face when they get started in crypto. They go to an exchange like Coinbase or Binance.com, and they just start trading with, let's say, $10,000 of their own money. And that's not a small amount of money for most people. That's your mortgage payment. That's food. That's electricity. That's your rent. So one bad trade or one black swan event, like what happened at the beginning of October where altcoins saw the biggest liquidation event in history, then poof, your account could be completely blown or go to zero. And then your rent's late, your savings is completely wiped out, your family is stressed out. So you're not trading to win. Trading with your own money is survival. Whereas trading $100,000 of risk-free capital is freedom. In fact, if all you have is $10,000, you should never be trading with all of that in the first place. The smartest move that you could possibly do is take just 10% of that, which is $1,000, and start trading with Breakouts Capital, which is acquired by Kraken. And all you have to do is pay for a simple trading test for a 100K account or a 200K account. And if you pass the test, then you're able to trade with 6 figures without depositing or risking any of your own money. And let's say you fail the test, well, you only lose the cost that it took to take the test rather than a full $10,000, because you shouldn't even be trading with $10,000 of your own money in the first place if you can't pass a simple little $1,000 test. And the best part here is there's no limit on retries. So when you click the link in the description below and you want to get funded for a 100K account like what I did, well, it only costs $1,000 here. And the best part is there's no limit on retries. And so that's 10x better risk management here. And that's how you prove you actually know what you're doing. And this is the smartest strategy that the best traders in the world use. And that's OPM, other people's money. So what I'll do for you is I'll leave a link in the description below. It'll take you to this page right here. And all you have to do is click the button that says start trading. And what I did was select the classic 100K funded account. Then you simply enter in your details to create your account, select the account balance. I'd recommend going with 100K. The account type is one step, the plan is classic, and if you enter in the affiliate code 777 on your checkout, it'll give you the maximum discount, and then check the box that says 90 to 10% profit split, because it's only $100 extra, and it pays for itself in your first payout. So if you skip it, you're only getting 80% of the profit split, so that extra 10% on the table is well worth it. Then you simply purchase the test, you'll get $100,000 loaded in your account, and then the profit target to pass the test is $110,000. So you just have to grow the account by 10% with an unlimited time frame. There's no deadline here. And just keep your account within a max daily loss of 4%. That'd be like $4,000 and a max drawdown of $6,000. And then you can withdraw your profits on demand 24/7 in USDC. Now, quick disclaimer, when you go through the link below and you use code 777 to get the maximum discount on your 100K or 200K funded account test, we do earn a small commission, but it helps support value-based videos like this. So click the link below in the description right now, take the test, and let's get you funded.
The consistent fear that I hear is that there's still this perception that digital assets are not welcome in the mainstream economy, and let me promise you that our effort to change the policy is purely about changing that. We want our fellow Americans to know that crypto and digital assets, and particularly Bitcoin, are part of the mainstream economy and are here to stay.
So if Bitcoin and crypto is here to stay, the most important question that you can ask is not why is Bitcoin and the rest of the market selling off? The most important question you can ask yourself is how can you learn how to make money regardless of whether the market goes up or down? Because based on that alone, logically, that just tells me to be more bearish right now and not long any projects until you see this bullish divergence play out a little bit more. So because this is not a strong bullish divergence where the price chart is making very clear lower lows and the relative strength index making higher lows, because we're not seeing that right now, I would want to see Bitcoin's price crash down to like $97,000 or $98,000 and do something like this before I get more bullish. And because we didn't get that price confirmation of Bitcoin breaking resistance, holding as support, in fact, it did exactly what I predicted in my previous video as a higher likelihood. And I'm not saying this to like toot my own horn here, because again, I'll take accountability when I'm wrong. But how do you make money regardless of whatever happens in the market? You learn how to look for very specific patterns that give you high quality trades, like this one right here that's a short on XRP that's almost $37,000 in profit. Because if you're entering the crypto market and you're just blindly buying an altcoin that's down like 5-10% because someone told you to buy the dip and just keep on diamond handsing, well, have you ever had a situation happen where you buy the dip and then it keeps on dipping, and then you buy the dip and then it keeps on dipping, then you buy the dip and it keeps on dipping? Well, I'm sure you have. So how do you know when the dip is done? Well, here's exactly what you do, and I'm going to give you the game for free right now. And if you want to learn even more in-depth strategies to become a pro, then consider joining altcoinpro.com through the link in the description below. So the first thing that we want to do is identify the trend. So it's very clear that Bitcoin has been in a downtrend ever since the all-time high. We've been forming lower highs and lower lows. So connect the highs, you can see the downtrend. Connect the lows, you can see the lower lows. Now, if we zoom in here on the hourly chart, you can see we're just continuing this downtrend. Now, during a macro downtrend like what we're in on the daily chart, since the all-time high, we can be in these micro uptrends, which are retracement rallies. So a retracement rally is just simply after selling is done, then we see these short-term temporary relief rallies before we continue the downtrend, like what we just went through recently. And now you can see 1, 2, 3 bearish candles. Now, depending on how this daily candle closes tonight, will help us understand if we're going to experience a relief rally or if we're just going to continue in this short-term downtrend on the smaller time frames. Now, if we're in the 4-hour chart, you can clearly see lower lows and lower highs here. So what I like to look for to determine whether the downtrend is done is for divergences. And so when we're in an uptrend, I look for bearish divergences. where the price chart makes a higher high, but a key indicator like the RSI makes a lower high. And when we're in a downtrend, I look for a bullish divergence where the price chart makes a lower low and a key indicator makes a higher low. But that's just one part of it to understand. So while we're in this short-term downtrend here on the 4-hour chart, I would want to be looking at the lows on the price chart to see if while we're making lower lows, if the relative strength index is making higher lows, and we're not seeing that right now. So that is sign number one that this downtrend is not yet finished for Bitcoin, and we could potentially go lower even with a short-term temporary relief rally on the 4-hour chart. This is a higher likelihood. Just like I said in my video yesterday, it's not a guarantee, it's just a higher probability. So we weigh the probabilities here. So on the 4-hour chart, because I'm not seeing higher lows on the relative strength index and lower lows on the price chart, that tells me that the bearish momentum is still too strong for a reversal right now. So I could go into a more micro time frame like the hourly, and we'll see if the RSI is making higher lows while the price chart is making lower lows. So very clear, price chart is making lower lows. Relative strength index, however, just put in another lower low. So this is sign number 2 for Confluence that this downtrend is not done, and the likelihood of Bitcoin getting rejected from this descending resistance right here and selling back off to the downside is higher right now than a trend reversal, unless we see a break of structure, which would be clearing of a resistance and holding it as support. So again, the main resistance that I'm watching is right up here around $107,000 to $106,000. Unless that's cleared, then I really don't care what happens in the meantime. Bitcoin could break all the way back up to it and sell back off with massive manipulation, and we would still be in a downtrend here. Until we clear this high, I'm more bearish than I am bullish. Now, a lot of people are going to look at that and say, oh my gosh, your channel's called Bull Runners. You're supposed to be bullish all the time. And there are times where I'm bullish, but if I'm bullish all the time, that's just delusional. We have to look at the facts here and then also weigh our probabilities to adjust our trading plan. So what I would want to see here for a reversal for Bitcoin is exactly what I just mentioned. That's a bullish divergence. So with the price chart putting in a lower low here and the RSI just putting in a lower low, I would want to see Bitcoin get rejected here and make another lower low, and then the relative strength index to start putting in higher lows here between 30 and 50. When I start to see that, that would tell me that this bearish downtrend is slowing down in momentum and Bitcoin would be likely to make a much larger recovery. Otherwise, the likelihood of rejection from a descending resistance is just higher probability. And we'll see if this plays out here, but this would be my expectations. So that's my prediction. And I'll play this in another video and I'll see if I'm wrong, and I'll explain why I'm wrong if I'm wrong, and if I'm right, I'll also explain why I'm right based on what I'm explaining right now. Because the strategy that I deploy in crypto to be able to understand the likelihood of what's going to happen next based on these divergences has been a more predictable strategy for me than just buying and not watching videos or not looking at the price and then just leaving it in a wallet, because a lot of people do that. And those are the same people that most likely bought up here or bought up here for Bitcoin and are pretty much at the exact same levels right now because they didn't watch these videos and they didn't understand when is the best time to buy or when's the best time to sell based on these divergent strategies. And you could do this on more macro time frames too, because if we zoom out here on the monthly for Bitcoin, you can clearly see the momentum has been slowing down on the relative strength index, forming lower highs here, but the price chart has been putting in higher highs up to the all-time high. So this is actually not a good sign. This means that Bitcoin's bull market is going to be coming to a close soon. Now, it doesn't mean it's over just yet. We're at a very key point here on the weekly chart at the 50 SMA right now. Depending on how this weekly candle closes here, this could be a curtain call for Bitcoin's bull run, because if we see several weekly candles close in a row below the 50 moving average here, then that could be a bad sign for Bitcoin. It's similar to what happened all the way back here last bull run after this bearish divergence was done playing out. So I'll give you an example here, and I've explained this in previous videos because you can clearly see the higher highs on the price chart here from January to February all the way up to April of 2021, and you can clearly see the lower highs on the relative strength index where the RSI failed to reclaim the all-time high here, but then made lower highs while the price chart continuously put in higher highs. And this shows that the bullish momentum was done to the upside. It was time for a much bigger correction back down to the 50 moving averages. Then also to the all-time high, that was another bearish divergence for a higher high here, but yet another lower high in the relative strength index, failing to reclaim 70. So this is what we look for on a more macro time frame to show that the bull run is done. On the weekly or on the monthly chart, when the RSI fails to reclaim 70 and the price chart has put in a higher high, and also the stochastic RSI is all the way up here near 100, you can see a bearish cross. That's a sign to get out of the market. So what are we seeing right now in the weekly chart for Bitcoin? Well, we can see the highest high in the relative strength index was on the 4th of March. And if we just draw this trend line to the 9th of December, you can see how it intersects perfectly with the most recent high on the 7th of July here. So the relative strength index has been putting in lower highs, but yet the price chart has clearly been putting in higher highs. So this is a regular bearish divergence. Higher highs on the price chart, lower highs on the key indicator. And because we're on the weekly chart, this is a sign that the bullish momentum for this entire bull run is slowing down and Bitcoin is near the end if it hasn't yet topped out already. So the likely scenario for Bitcoin here, in my opinion here, based on what I'm seeing on the charts and my prediction, is once the stochastic RSI finds its low, is at 7.51 and 2.31. Once it finds its low down here, we'll see a bounce in the stochastic RSI. We'll also see a bounce in the relative strength index, and it would most likely be met by another lower low between 70 and 50 on the relative strength index. And then I would expect it to either reject along with another bearish cross in the stochastic RSI. Now, depending on where that puts the stochastic RSI, whether it's like at 50 or 80 or above 80 and it goes up to 100, eventually there'll be another reversal back to the downside after this recovery back to the upside. And that recovery to the upside for Bitcoin on the price chart doesn't matter what it does. It matters what the confluence is showing on both of these indicators. So if we're seeing the relative strength index getting rejected from a descending resistance and the stochastic RSI is all the way up here at 100, and let's say Bitcoin bounces up and it's getting rejected from like 112 or 115 and coming back down, then this, in my opinion, right here would be the sign to get out completely, because then Bitcoin would more than likely go into a bear market from there. So if we form a lower high, you have to be okay with that type of scenario based on what these indicators are showing us. Now, if Bitcoin breaks out aggressively and goes to like 140, 150, or $190,000 and just starts to melt faces in like December, January, February, and something like this takes place, then we go into a bear market. Well, we're going to revisit this chart and we're going to talk about it based on what these indicators are showing. So this does trigger people who like to comment things like it could go up or it could go down. Really great insight. When I give different examples like this of a lower high and then it going down, or a higher high than it going down. But the nuanced point here to really pay attention to in this video is it doesn't matter, number one, whether it's a lower high or a higher high. What matters is the confluence that you can see on these key indicators here. Because if the stochastic RSI is all the way up here at 100 and the price chart is not forming a higher high, then you have to take that into account. But let's say, for example, Bitcoin starts to break out and is forming a lower high, and the stochastic RSI is just barely above 20, then that's a sign that there could actually be a lot more momentum to the upside here for the price to break out and make a new high. It's very important to watch where the stochastic RSI is, regardless of whatever the price action is showing, and then also look for confluence here in this downtrend on the relative strength index to see if we are at a descending resistance. If we're not, then that's something to note. Now, I also talked about total 2, which is every single altcoin, and this is what I said. Because we're in this short-term downtrend for total 2 here, forming lower highs and lower lows, we then apply the same principles here, looking for a bullish divergence on the opposite end. So you can clearly see this lower low right here in the price chart. We can see higher lows on the relative strength index. So this is the start of a bullish divergence, which is a great sign of bearish momentum slowing down. It doesn't mean the momentum is done though, because we're still in this downtrend. We need to see a break of structure. Now the challenge here for total 2 is that break of structure and the resistance is all the way up here at $1.4 trillion. So there would need to be an aggressive move for altcoins here in order to break this downtrend. Otherwise, the selling pressure is just going to remain a little bit stronger to the downside, while Tether's market cap dominance has this bearish divergence play out a little bit longer to the upside before rolling over to the downside. So that just means there's a higher likelihood right now of altcoins selling off while Tether's dominance goes up in the short term until we see this structure change. So again, if you guys want to learn how to read charts, do technical analysis, this is by far the most important skill that you could ever have. Way more important than listening to fundamental news of what Trump's saying, of what politicians are doing, or what companies dumping Bitcoin and altcoins. Because when you can learn to look at charts, you can see what those companies are also looking at. Rather than reacting and being the colored balls on the table, you can be the cue ball that knows how to act before everybody else does based on what's happening on the charts. And again, all you do, click the link below, go into the classroom here, and you can either go step by step, you can click start here, or you can just go right to the technical analysis essentials and go through all 28 of these videos to understand in detail what to look for on the charts. Because when we look at total 2 here, we saw that sell off as well. So the probability of the market going down was higher than it going up. So now what we want to look for is any sign of a bullish divergence. And we're just not seeing that. We're seeing the RSI put in a lower low here and the price chart just putting in another lower low. So this tells me any sort of relief rally right now in the short term of total 2 is most likely to be met by resistance and for us to continue this downtrend. And we'll see how aggressive this retracement rally is before continuing this downtrend. And then we'll revisit this in another video and I'll show you whether this prediction's right or it's wrong. But based on what the chart's telling me, and based on what I look for to get more bullish, is a bullish divergence. Again, I want to see higher lows and these lows on the relative strength index holding between 30 and 50 while the price chart makes lower lows in this downtrend, coming back down a little bit further before we see a much bigger bounce to the upside. Now that's on the hourly chart. On the 4-hour chart, we can see here the RSI hasn't even gone below 30. The last time that it was below 30 was all the way over here on the 4th of November, and total 2 is just hanging on for dear life, wicking right off of that low. So if this support holds, then the resistance to watch here to the upside is just this descending resistance at roughly $1.35 trillion here, which is a major point of confluence. And then I would just expect the price to just range for a little bit or just go down even further because we're still in a macro downtrend here. So in order for me to get more bullish on altcoins, the first thing that I would want to see right now on the 4-hour chart is the relative strength index to drop below 30. This is what I want to see. I would also want to see the price make a low with that. And then I want to see a recovery on the RSI back between 30 and 50. And then on the next pullback here, I want to see it doing something like this, holding between 30 and 50. And then the price chart slowing down this momentum and doing something like this, where we see a lower low to confirm the bullish divergence on the price chart and a higher low on the RSI. And then for us to start putting in these higher lows on the price chart with the RSI putting in higher lows too, then that would be a sign for me that a much bigger recovery is coming because we don't stay in a downtrend forever. And also we don't stay in an uptrend forever. Now, we've been in a downtrend for a while, but that downtrend isn't done until we see what? A break of structure. So that'd be a clearing of a major resistance. This is the main resistance that I want to clear, $1.43 trillion. Until that happens, we're just still going to be in a downtrend. Now, this type of downtrend here is a falling wedge. And if we see a break back to the upside by the end of the year, the target is the height of the wedge. So depending on where the low is, if we go a little bit lower, let's just say based on where we're at right now, well, it's about 31% back to the all-time high here. So the first step for a recovery out of a falling wedge is this right here. We see the breakout, we see a little consolidation, then we either see a continuation of the major trend reversal after this bull flag right here. So right now what we're going through is we're going through this phase where we need to see if the low is in, and if the low is in, we need to see some sign of strength back to the upside. So it's still too early to say that that's going to happen yet until we see this major resistance clear. Also, Bitcoin's dominance is still in an uptrend right now, forming higher lows and higher highs here in this retracement rally, and the relative strength index is only at 64 right now. The stochastic RSI is at 18 and 13. So this tells me that Bitcoin's dominance could continue higher while altcoins bleed out. Now, it doesn't mean that Bitcoin could continue to sell off. It just means that altcoins would sell off harder than Bitcoin while Bitcoin continues to go down. And I've talked about this in previous videos where I would want to see Bitcoin's dominance retrace anywhere between 50%, even all the way up to 70%, which is like 61% to 63% dominance before we really get a rotation over to altcoins. So Bitcoin's dominance could stay strong well into December, and altcoins could continue to bleed out more than Bitcoin. So it's just safer to be holding Bitcoin. Now, XRP here. What do we see on XRP's price chart? Right up here, there was a major sign that price was going to reverse back to the downside. Well, if we go to the 5-minute chart here and we zoom in, you can see the highest high on the RSI in this uptrend was all the way up here at 81. Now, if we circle where that was on the price chart, it was on this massive run up for XRP. So during this pullback, the relative strength index pulled back as well. And then the price ran up again and the RSI ran up again. Now the price put in a higher high here, whereas the relative strength index put in a lower high. But because the RSI did not top out between 50 and 70, you have to let this play out a little bit further because the price can continue to make higher highs until the RSI fails to reclaim 70. So that's what we started to see. Even with these pullbacks, the price continued to put in another higher high here. But look at the relative strength index. On that pullback for the RSI and the higher high in the price chart, the RSI topped out right here at 64. This is what we want to see. It failed to reclaim above 70. So that showed that the bullish momentum to the upside was slowing down, and eventually we're going to see a bearish correction. So then what we start to see after a bearish divergence is done playing out as we see the price break structure, which is a major support. So the support was roughly right around $2.45. Now you could draw it all the way up to this candle body close right here, but it's roughly $2.45. It's not 100% exact. So we go all the way back down here to support. We go below it briefly and we attempt a final recovery rally up here and we fail to reclaim the highest high. So we see this happen a lot, and these are called retracement rallies. This is what Bitcoin right now is doing on the dominance. It basically formed the highest high right here, saw this massive sell-off, and it's now retracing, which is why a lot of people are saying that Bitcoin's dominance is going to break down after this retracement here. So during these retracements, the Goldilocks zone is usually 50% to 60%. Sometimes it can go even higher than that, which is what happened here with this wick. You know, a lot of the times when we see it retrace, it tops out right here and then it rolls around back to the downside. Now, again, it's not cookie cutter. It's not exact every time. As you can see, it wicked all the way up here, but nonetheless, it was a lower high than the high of that rally. And look at the relative strength index. It failed to reclaim above 70 again for the second time. So this was another entry point if you were considering entering into a short or getting out of XRP rather than just listening to people telling you to FOMO buy the peak. And sure enough, what happened? Well, XRP reversed back to the downside. So now that XRP is in this downtrend here, forming lower highs and lower lows, what do we want to look for? Well, the exact opposite of a bearish divergence. We want to look for a bullish divergence. So we want to find the lowest low on the relative strength index, which looks like it's down here at 22. And we can see that the RSI is now putting in higher lows and is starting a potential trend reversal. So the price chart put in lower lows. This is a confirmed bullish divergence here. Higher lows on the RSI, lower lows on the price chart. And now look at what's happening on the price chart right here. It starts to bottom out and show some sign of support in this downtrend. And now we start to get this attempted reversal here. So XRP could make a major move to the upside and the relative strength index could spike up above 70. And then we see some type of sell-off and consolidation up here in this downtrend for XRP. And on the more micro time frames, I would be looking for a bearish divergence right now in this retracement rally for then either a continuation of the downtrend or a much more macro trend reversal. So right now, because we're in a retracement rally right here, the first thing that I would look for is the highest high in the RSI above 70. And we're not seeing that right now, which tells me there's a little more momentum to the upside for XRP in this retracement rally here, which also tells me total 2 has a little bit higher to go in this retracement rally here, ultimately coming in contact potentially with this descending resistance right here or stopping short of it. So it could be another 3% to the upside for total 2, which XRP is included in. And so we'll just have to see where that comes in for XRP because it's been very volatile lately. You see these recovery rallies here. Some of them are smaller than others. Some of them are much bigger than others. So we don't know exactly when it'll top out, but what we look for are the divergences, right? So I'm on the 5-minute chart. I would want to look on the 15-minute chart though for some type of bearish divergence because the 5 minutes a little too volatile. Even the 15-minute, a lot of the times I'm looking on the hourly. But just for the sake of this example here, on this retracement rally, you can see the RSI is at 49 right now. The stochastic RSI is at 97 and 97. So I wouldn't be buying into this rally here because it could easily roll back over to the downside and make another lower low because we still are in a strong downtrend here. What I would do is I would use the hourly chart to determine a bullish divergence, like what happened all the way back here from the 3rd of November all the way to the 5th of November. You can clearly see the price chart making lower lows on the hourly chart, and you can clearly see the relative strength index starting to put in higher lows. And then all of a sudden, you see the RSI bottom out between 30 and 50, and then the price chart starts to put in a higher low right here. While the RSI bottomed out at 43, we see a rally back to the upside in this retracement, and then we see another sell-off back to the downside to put in a higher low on the price chart, and then the relative strength index puts in a higher low. So by this point right here, this is where I'd be more aggressively long in the market because we've seen the manipulation, fake out rally here out of a downtrend, then a final sell-off, and then we reverse back to the upside for a much bigger bounce. So this is what I'd want to see. You know, I want to see the manipulation for XRP done. I want to see price action start to look something like this, and that could take a little bit of time to play out because what we're going through right now just doesn't look good. This isn't showing me signs of strength. This is just showing signs of manipulation and weakness to the downside, where XRP is still in this downtrend here, getting rejected from this descending resistance. You know, even if we come all the way up to this descending resistance right here, XRP could easily reverse back to the downside, back down to these lows right here, because we're still in a downtrend. A much more macro reversal sign for me would be holding on top of this resistance as support, which is like $2.70. I want to see that take place. Otherwise, XRP is just going to continue to range between resistance and support and do whatever the market makers are going to make XRP do within this range. So it doesn't matter what happens between a resistance and a support. What matters is your ability to identify bullish and bearish divergences applying this strategy. So because the price chart is putting in lower lows and the relative strength index is putting in another lower low, tells me that even with this short-term recovery rally for XRP, it's likely to be met with more selling back to the downside. Do you love crypto, but are you worried about taxes shrinking your retirement nest egg? Here's the deal. Trading and selling crypto can trigger capital gains taxes eating into your wealth. A crypto IRA fixes that. Per IRS publication 590B, traditional IRA gains like those from crypto aren't taxed until distributed. That's why we've partnered with iTrust Capital, a leading crypto IRA company in the USA, to sponsor today's video. And they offer institutional grade custody for retail clients that want to set up their crypto IRAs for retirement, leveraging top storage solutions like Fidelity, Wells Fargo, and Coinbase Prime to keep your assets secure. To get started, simply click the link in the description of this video, sign up for free, and fund your account with cash. They also offer 401k rollovers or crypto transfers, and you can trade 24/7 with just 1% transaction fees and no maintenance costs. As always, I'm not a CPA or financial advisor, so consult one for tax advice, and we do earn a commission if you sign up using our link below to fund your crypto IRA account, but that helps support value-based videos like this. And iTrust Capital already has over 200,000 crypto IRA accounts and over $14 billion in transactions, proving they're trusted by smart investors just like you. So click the link below, get started now by funding your account today, and let's create generational wealth together.